late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today we're going to do a little macro update, take a look at the charts. There's a ton of volatility in the markets out there. Pretty crazy time if you are following what's going on. We basically had Trump come out the other day and tweet that it's a good time to buy. Obviously, you know, we've seen his kids come in trying to get involved into Bitcoin and Ethereum, you know, recommending people to buy Ethereum at about $3,000 and Bitcoin at $90,000, only for them to drop 20-30%. So kind of took that with a grain of salt. That being said, I was personally buying into the SPY. I did mention that in my last videos kind of earlier this week, Monday, Tuesday. I said we got to this point where it made sense to be adding to those long-term conviction bags. Being down 20% on a major stock market index in such a short amount of time is a major drop, and I did expect that bounce play some relief, so I started layering into those positions. We did really good. We pretty much timed the bottom to the day, you know, not exactly to the dollar, but close enough for me. I'm super happy with that, happy with those buys. We managed to get a nice successful swing trade on Bitcoin using leverage, so we're able to amplify those returns, increase our profitability, build more cash, and position ourselves better for the future. So I want to jump over to the charts here. We're going to take a look really quick. Starting off on the VIX, so that volatility index overlaid with the SPY. So the SPY is this orange kind of pink, or sorry, not this pinkish reddish line, and our VIX volatility index is this blue line. Remember I said, guys, watch for that spike above 30 for that that uptick and spike above 30 for that increased volatility, which generally coincides with downsides in the stock market. So we can see that right here. We had this big push above 30 over here in 2020, coinciding with a larger correction. If we go further back in time, we can also see it did happen other times in history here. So back in 2009, similar type scenario, and same thing back over here. So that's what we were watching. That's exactly what played out. So that, along with all the other factors that we look at in terms of technical analysis, is what gave us those warning signs. It's also what kind of gave us the signal that things are oversold enough. We're getting to really strong technical levels, you know, looking for a bit of a bounce. Although I wasn't willing to take the additional risk in individual stocks, I'm happy to add to my long-term market indexes. You know, those worst case scenario, I have to hold them for 5 to 10 years. You know, it's a long-term play, but if we can take advantage of those opportunities and then get those kind of buys at a pretty steep discount, you know, a 20% drop in the stock market over a few days does not come around very often, and I wanted to take advantage of it. So we did that, and then we now have moved on. We're looking for the next opportunities. So we saw a big, huge bounce in the SPY. I'll flip over to that chart here, and then we'll just set it up a little bit better for you. So I'll just go back to our candlestick chart here. So what we saw yesterday, so I have the SPY overlaid still, get rid of that. Pretty much what we saw, I was just targeting a similar move to what we saw here. So on this extension from the low to the high, we took our Fibonacci retracement. We came back to that 0.5 Fibonacci level, and that's what I pulled right here. That's where I targeted that entry, and look where it ended up. So pretty much nailing that entry right there. We are also, so people that tell me technical analysis doesn't work, I agree to an extent. I do say technical analysis does not work 100% of the time. It's never going to work 100% of the time. What it does for me is removes that emotional side of investing, because this is just a representation of all the market participants and where they're buying and selling assets. It shows me where are high probable levels of support based on history as well as price action. And then we can use all those other little indicators to help tell us whether an asset is oversold, overbought, you know, whether momentum's running out, whether it's just starting. So we use all that together. We were able to de-risk at a pretty high price. You know, we didn't nail the top, but we're never going to nail the top exactly, because we want to maintain exposure if that uptrend continues. But as soon as we get those warning signs that the trend is slowing down, we're losing momentum, there's bearish pressure building, you know, that's when we take our profits off the table. table, we de-risk, we maintain our core conviction exposure in case that the market keeps running, and then we just look to re-enter that cash on opportunistic chances. So what we did, wait for that drop back to this Fibonacci retracement, enter the market there, and then you can see getting a nice bounce from there. Despite the down day today, we're still up 10% on that entry, so still a really good move to enter the SPY and capture a 10% move in less than a week. You know, if you're swing trading, definitely don't be afraid to take profits. You know, 10% is kind of the average return per year on the SPY, even less sometimes. So if you're just in that kind of swing trading mode, you know, it doesn't hurt to take some profits off the table on a 10% move on a major stock market index. And at one point, it was even about probably 15% or so. Yeah, we saw that. So from the low to the top of this candle, it's a 18% move. So pretty crazy volatility there in these major stock markets. We're seeing them come down a little bit today, so down 3%. We see the NASDAQ down 3% as well, and the IWM 3% and Dow Jones 3%. We also see gold up and silver up, so kind of that risk off narrative coming back a little bit. The dollar is weak, but we're seeing lots of strength in the Swiss franc and the Japanese yen. So I talked about these two assets. Essentially, since 2025, they've been trending up against the US dollar. We can see right here, so the Japanese yen and the Swiss franc, both currencies that I kind of consider alternative reserve currencies. We see the Swiss franc especially just breaking out of this trend line here, just in a crazy uptrend. This all happened around the tariffs, which just basically signals to me, you know, a lot of people getting a little worried about potentially the money they have invested in US debt, maybe repositioning themselves in their own local currencies, just to protect from that currency risk and that trade war that was escalating with China. So the trade war is kind of not escalating, let's say. He has paused tariffs for 90 days. So that's where this kind of insider trading, market manipulation aspect comes into play. We saw yesterday that pretty much right before he was about to announce right before he made this post saying it's a good time to buy, we saw this insane amount of activity in the SPY, just a crazy amount of call options being bought up. We also saw him bragging about his friends, how they made, you know, $25 million and $900 million on that stock market move. So it's no surprise to any of us. Politicians are giving the information to the insiders beforehand. You know, we followed it with Nancy Pelosi over the years, all these different politicians that have amounted hundreds of millions of dollars of conveniently timed executed trades in companies that they're overseeing or they're regulating. So obviously we expected the same thing here. Insiders always know before us. We don't have that privilege of that knowledge there. Excuse me, sorry. We don't have the privilege of that early insider information, so we're just kind of left reacting with what we get on the charts. So we're going to flip back over to the SPY, take a look at it on the low time frame to see if we can figure out what might be going on. So we'll take a look at some of our indicators here. We're going to look at our big money buy indicator. We're going to look at our directional movement. We're going to look at the MACD and the RSI. So right here, you pretty much see, actually, when we came into these lows, we didn't actually get that big smart money buy indicator flashing like we did over here. So that gold bar, that just kind of signals to me that retail was probably a lot buying the dip kind of in here. We did see some politicians also making some notable purchases in there. We got a bullish cross on our MACD here with that histogram flipping green. Nothing on that big money buy indicator right now. The directional movement index, it's still kind of neutral. We want to see that blue line curling up towards the orange line, and the RSI is kind of topped out here, heading back down. So this is what we're going to look for. We need to maintain this higher low structure. So if I take a look at the even lower time frame, and we'll just pull this up, what we see here is we just have a bit of a trend line. So we'll go from here to here. So we see this trend line, and we also are going to pull our Fibonacci from this breakout here, and we can see that we're looking at a 618 to 786 Fibonacci retracement zone that coincides with this upsloping trend line here. So if you're looking for that additional entry into the SPY, this is going to be the zone that you're targeting. You know, you're not chasing it after a 15% pump to the upside, waiting for your entries to come back and to those lower targets before you kind of make those buys. We can take a look at some of our moving averages and see what they look like here. So basically, we are stuck underneath all our key moving averages. We continue heading towards that death cross of the 50-day and the 200-day. So we're still stuck under key moving averages. We're still stuck under resistance. You know, I don't think we're going straight up. Nothing really is a V-shaped recovery. A lot of people think we're just going to go up back to all-time highs, just like COVID. But that's not going to happen this time. It's a different economic situation. They're not going to print $6 trillion and just give it to everyone. So there's not going to be this massive influx of liquidity that we had in that prior cycle. There's also not the same economic backdrop that allows for additional risk taking. So interest rates are a lot higher, consumer savings are lower, consumer credit kind of debt delinquencies, they're all rising. So the amount of money that the average consumer has to put into the market is a lot less, and we're not going to get that same sort of QE that we got in the prior cycle. You know, I do expect to potentially get that rate cut this year and maybe that pause of quantitative tightening, especially with the current economic standpoint here and kind of the tensions around trade wars. But Jerome Powell is not going to mess around. He's not going to risk kind of all the work that he's done so far to bring inflation down. He's done a really good job, in my opinion, and kind of all this stuff that's happened recently is just throwing a wrench in everything. It's just introducing all this volatility and uncertainty into the markets. So we kind of just have to follow the charts and not invest based on the news, wait for those technical levels to hit. That's exactly what we've done so far, and it's what we're going to continue doing. It's what allowed us to de-risk. It's what told us to get back into the market. It's also what we use when we're looking at our swing trades here. So this is another one. We did just close a swing trade and Bitcoin. So although my target was a bit higher for the profit taking, I trail my stop losses up. So that means as a trade continues going into more and more profit, I continue moving the stop loss up just to protect those profits. So by the time it hit, you know, our stop loss was actually 82,000. So I exited that trade at 82,000. You know, we had a 7.7% return unleveraged. I was using it on 10 times leverage. So for me, that was about a 77% return on that trade. We've got a total return of our swing trades of about 35% and a win rate of 77%. So what I told you previously, when you have a 3-to-1 or more risk reward ratio, you only need a win rate of 40% to be break even. Anything above that and you're profitable. So obviously aiming for a higher win rate, the better. So obviously looking pretty good, 77% win rate. We've made 35% return on our capital unleveraged in our trading portfolio. So now we have additional capital to take advantage and be able to buy the dip in other assets. So that's what I talk about, utilizing kind of all this stuff together. You know, just because I'm not actively investing on the long term doesn't mean that there aren't opportunities in the market that we can take advantage of. And this is just an example of that. So we'll continue looking for these swing trade opportunities, especially during these times of volatility and uncertainty. We don't really know what's going on. You know, the market's swinging 10% up and down, 5% up and down every other day. It's pretty crazy. It's hard to kind of enter any positions with size and conviction because you're not sure what the next announcement's going to be. So we've seen essentially the US puts a 90-day pause on their tariffs. The UE has put a 90-day pause on their tariffs. The tariffs towards China are still in place. We have seen both the US and China say they're willing to negotiate. China wants the US to compromise, so we'll see kind of how much of a compromise the US is willing to give, and then if that's going to be sufficient for them to come up with some sort of deal. Otherwise, it's too early to say if the bottom's in. You know, there's still too much uncertainty and volatility in the markets. There's no point rushing and trying to figure out, you know, when do I need to get all my money into the market? Because as I said, it's not going to be a V-shaped recovery. We're going to have multiple opportunities to enter the market, as well as multiple opportunities in individual stocks. So don't over risk, don't over leverage yourself, and just be patient. Chart those levels, figure out what you want to hold on the long term, and then add to those positions on a dynamic DCA basis until we get that confirmed trend reversal on the high time frame, in which case we can start to look to enter the market in a little bit more size. So obviously we're going to see the NASDAQ, the Dow Jones, the IWM, they're all down today. All the charts looking pretty similar. We see gold, although it did get that little retracement, it still resumes its uptrend structure. So gold continues looking strong, holding all the key moving averages and continues breaking out. So that's that risk off narrative. We see silver here getting back into this trend line, or back above this trend line here. So we want to see that continuing up. Otherwise, it might break down and just come back, retag this support down here with the VRVP. We see oil, nat gas, both down quite a bit, and copper. So that's kind of what might have helped bring the inflation down. So we saw CPI come in at 2.4%. The expectation was 2.6%. So good to see inflation trending down. That kind of supports that thesis that we could get a rate cut. That being said, if tariffs do come back again, it's hard to say. You know, obviously the news changes every other day. There's a new headline. We're not sure when there's tariffs this day and then not the next day. So who knows what's going to happen in a week. It's hard to really tell what's going to happen day to day. So if we do see that continued de-escalation on the tariff front, that allows Jerome Powell and the Fed to potentially be able to actually do those 1 to 2 rate cuts. If we start to see kind of tariffs creep their way back in and then more inflationary fears, then that kind of just defeats the purpose, or defeats the ability for the Fed to cut rates, because if they believe that there's going to be an inflationary effect from tariffs, there's no reason for them to cut rates. It just doesn't make sense. So also we see the Chinese stock market up today. We see the Japanese yen up and the Swiss franc up, as I mentioned. We're going to flip over to Bitcoin and crypto really quick. Take a look. So Bitcoin here, we saw this is what we're looking at as a potential another swing trade entry here. So just looking every time we come back into the 70s, I've been building swing positions on Bitcoin and unloading them when I get to the 80s, or just trailing those stop losses up as they get into profit. So you can see here we've got a Fibonacci retracement support zone that's 786 to 618 right through here. We've got our VRVP point of control, so that's that big volume shelf right here, and then we've got lots of horizontal support below. So if I'm taking this trade, you know, waiting for price to come back into the 70s again, you know, maybe dollar cost averaging down to 77. You have your stop loss down here just below the prior low, and then riding that back to the upside. Worst case, we get stopped out. We lose a little bit on that trade, but overall, we're still profitable, and we're still, we haven't taken the additional risk. You know, we have the stop loss to protect it. Rather than riding that continuously down, if we do go into that continued downtrend, we cut it, and then we're out. So this is what I'm looking at for Bitcoin. You know, nice trade last time, and let's look to kind of do the same thing here. Taking a look at Bitcoin dominance, green on the day, so we'll take a look at the daily chart. Yeah, dominance continues showing strength. Like anyone who's kind of in altcoins is really feeling it here. So pretty much we see that just that obvious uptrend by dominance, just showing a lot of strength. Taking a look, we see that bearish momentum building a little bit here. Sorry, not building. We see the bullish momentum slowing down a little bit. So that bearish cross of the DMI positive and ADX line, just showing that the bullish momentum is slowing down a little bit. Same thing with the MACD, just curling over. The RSI is bouncing, so we'll see here. This is what we're going to watch for. So similar to what we saw in kind of the other charts, that was a bit of a warning. If we get a bearish divergence, so I take a trend line. If we see from here, if we get a lower high on the RSI, so watch for that peak right there, and then we also get that higher high on the price action. So if we see this go up here, so obviously price needs to pump up a bit and the RSI needs to top out. Watch for that potential bearish divergence forming, because that could be a signal that dominance trend is kind of slowing down, losing momentum, and might be due to put in its kind of final top before we go in, break down, put in our lower high, and then hopefully get continuation to the downside to allow our risk assets to perform better. Whoops, don't know what happened there. So that's pretty much, we'll take a look at Bitcoin dominance. So I'm going to look at total 3 as well, just to take a look at our altcoins. My watch list just kind of deleted itself, so sorry about that. We see though, pretty much, you know, we did hold this low here on the daily, but we're stuck under all our key moving averages. We're stuck under the VRVP point of control, and we're stuck under horizontal resistance. So if we take a look at our momentum indicators, not looking too good. Although our MACD is quite oversold, we aren't getting any bullish momentum building on the DMI or the RSI here. So total 3, still more work to do. Take a look at Ethereum, Bitcoin. We can see here pretty much just still just in that downtrending price action. Nothing too exciting going on. Pretty much, we also see the bearish momentum losing it a little bit here, but we still are in that downtrend price action, lower highs, lower lows, you know, just a falling knife. Not interested in buying into that. Let's take a look at USDT dominance. So this is another one that I was talking about recently, just paying really close attention when this is in an uptrend. Generally speaking, Bitcoin and altcoins are in a downtrend. That's what we saw. So pretty much what we have here, just following this channel quite nicely, bouncing here, holding key levels of support. So USDT dominance continues in an uptrend. We can take a quick look at the Bitcoin futures here. So I did find two little gaps here in the daily. Sorry, we only have one now, so we filled this gap here, and then now we do have a little gap just up here around 85,000. So we could see price go up to there, or you know, we might come back down first and then hit that level, take out that liquidity before we kind of try to continue that uptrend structure. We can flip over to stocks really quick. We're going to take a look here. So we see kind of just down across the board, you know, gold miners doing well, obviously, because gold's doing well. Tesla down 6%, kind of coming back around that 250 level. So 250 and under, I did say it was potentially a good opportunity to DCA. Ultimately, I was aiming for that kind of 200 and below for an accumulation, but I had this interest, or this area of interest marked here down at 215. That's where we came to, bounced from there. So we'll take a look at our momentum indicators, kind of just neutral here. Neutral, if not slightly bearish leaning. So if you're just interested in DCAing Tesla, not the worst time. That being said, just recognize we don't have confirmation of any kind of trend right now. Same thing with Nvidia, you know, under 110 is not a bad DCA, but we can always come back a little bit lower. See, we did come up, get rejected by that VRVP point of control, which is also right around our 50-day moving average. And same thing, just kind of neutral-ish momentum on our indicators. Nothing looking too exciting right now. I'm just going to scroll down. I want to look at BABA. So BABA is one I actually have made a small purchase of today. It's just my initial purchase. So what I recently had, you know, I bought BABA at an average of about $80, you know, a little while ago. And then I took profits at $120 and $130 when it came up. It actually ended up pumping all the way up to about $150. That being said, look where it is now. So if you ask, this is what I talk about. Don't be greedy when it comes to taking profits. You know, we came up to my resistance zone. I took some profits because that was my strategy. We pumped up a little bit more, and then I continued taking those profits because, again, that was my strategy. I have to follow my strategy. Otherwise, emotion takes control and it makes you make poor decisions. And we see what happened. Look at that huge retracement. So if I were to hold on to that position, I would have given up all, despite even capturing a little bit more upside, I would have given up about 35% of those returns just in this correction here. And that's what we saw over here, this bearish rising wedge breaking down and coming back to that support. So same thing we saw over here, bearish rising wedge breakdown. We're out of that position. You know, we've made over 55% on that trade from $80 to $130. So really good opportunity. Book those profits and look to reinvest them. So now we're getting back. We got to our 786 pretty much. We had a nice little bounce. You know, I didn't enter here just because it was too much uncertainty, too much volatility. Nobody knew what the next reaction to tariffs was going to be. As soon as we started getting those kind of those announcements about countries pausing tariffs and being willing to negotiate, I saw that BABA yesterday had lagged the stock market. So we saw all the major stocks in the US pumping 20, 25%, all the major indexes pumping 10 to 15%, and we saw BABA and Chinese stocks not doing well, obviously because of that kind of volatility around the US-Chinese relation there. So I kind of think of that as a potential buying opportunity, especially in BABA. You know, I still think China is going to be a major player in the AI space going forward, and BABA is going to be one of those companies that's kind of up there with them. I do consider it kind of the Chinese Amazon. So I've entered a small position in BABA around $106 per share. So just rebuilding this same swing trade position. Starting now, I'm going to DCA down to about $90 for now. I'm going to have a stop loss a little bit low, protecting that position. But for now, just inching my way into the market, dipping my toes in, not getting super aggressive, but trying to take advantage of opportunities that might have been lagging or may have opportunities to go on to outperform. So Baba is one of those I think could do that. I could be wrong. That being said, I'm willing to DCA that position, take a little bit of risk, but ultimately still saving a lot of capital for the confirmed trend reversal. Same thing with crypto, Bitcoin. You know, before we really want to get aggressive, we want to make sure the trend is on our side and we're ready to move to the upside. You know, I don't think it's a V-shaped recovery. I don't think it's gonna be. There's gonna be many opportunities to get back into the market or to de-risk if that is the case. So we're never gonna know. We're just gonna keep following the same stuff, the same indicators, the same signals that we always have been following that have kind of helped us navigate this market so far. And then we're gonna make our decisions not based on emotion, but based on technicals, based on fundamentals, and based on our strategy. So thank you so much for watching, guys, and I'll see you in the next one.